Welcome guys, this is Sarvesh here, and today we're gonna go over our first topic for SIE. I made a plan. I'm gonna do this. I'm gonna preach the basics of finance because after reading SIE I discovered there are so many things that people don't know about, and they're the basics. I know school doesn't teach it, so how about I just share the basic knowledge that I got from SIE, and the more I can share the better. I feel like I just want to educate on basic personal finance and the big small investment like the investment strategies that people can use if they want to. Okay, let's jump into it. So today's first topic is basically the book's first topic is security and commodities. So we're gonna learn about them today. So let's just jump into it. What is a security? I got my notes here. A security is an intangible asset that people can share between people can sell, they can buy, and they can give to each other. Now the difference between security, now the security can be in the form of like electronic or a paper certificate format. Earlier it used to, like, I'm pretty sure most people have heard that, like in 90s or in the 19th century, like there were stock certificates that used to be given by the companies to the investors. Now that's in paper format. Now it doesn't happen as much as now. It's totally electronic as the technology is getting better, but that's the basic kind of definition about security. I can also give you examples of securities are like stocks, bonds, all kind of debt, options, mutual funds, jumbo CDs. CDs means certificate of deposits. We have depository receipts, unit in investments, and variable life and variable annuities. I know some of these people don't know about it, and that's why I made a decision that I'm gonna start to share my knowledge about it. Like, I'm pretty sure there are a lot of people who doesn't know about variable life and variable annuities or depository receipts, jumbo CDs. The most people know about is mutual funds, because that's the society tells, even the schools, colleges tells, oh, just invest in mutual funds, diversify your portfolio. If a person has $5,000-$10,000, or in relative term to other countries, like small amount of money, he's not gonna get like good percentage return based off diversification. Like, he needs to, mutual funds is a good strategy. It's less risky, but it also like totally depends on what's your risk profile. You want to take more risk or you don't want to take more risk. But that's something for later on. I'll share more on that later on in this journey to share my knowledge about all the things I learned. Now we're gonna jump into the next topic, which is difference between securities and commodities. I just went over securities. Now what are commodities? Commodities are tangible assets that can be touched, and there's a totally different separate market where you can also kind of trade commodities. It's called futures and forex. Like in forex you trade currencies, but in futures you can trade commodities. Commodities are usually related to natural resources, like I will go into the examples later on, and they're also usually considered as finite, means there's only a limit of how many commodities can be extracted, but for securities, the companies can always do more offerings. They can, in order for them to raise more money, they can put more stock into the market, they can sell more stock and just raise more money. But that's not the case with commodities. Commodities, you can let's take an example of gold. You can only get more gold when someone in this world finds a new mine, so it's like very finite. Otherwise, yes, it's like It's just those resources which are could get extinct, like, or you just can finish up. Uh, and commodities have a value, like they literally do, they hold value over time. Like we saw gold like perking up for last 2 years. Like earlier people used to not value gold as much because it wasn't getting, but if you look at long term since 19th centuries, like gold has just been going up. Like its value is just keep going up slowly and steadily, you know. And the other thing was like commodities have intrinsic value, guys, but securities don't. What I mean by that intrinsic value, that commodities are something which are used in day-to-day activities. Like people use gold, other commodities like lumber, they used to make houses. You can use oil. Now when we already reached to that, how about let's take examples of commodities examples like basic cash, currency, gold, silver, oil, or you can take other condiments as well. There are fixed annuities as well. Life insurance is also considered as commodity apparently. Whole and term insurances. A person's residence is a commodity. And the interesting thing about this is that as of now, cryptocurrency is also considered a commodity. I know you guys gonna say, oh, cryptocurrency is not tangible because it's all totally decentralized, it's digital currency. I totally understand that. But there's a huge, like they have been talking about it for very long, and as of now they just consider it as commodity for some reason. You can check on Google that cryptocurrency is considered as commodity. But yeah, there's a inverse relation between security and commodity. When I say inverse relation, it means when the prices of commodities go up, it's usually seen that the prices of securities go down. For example, 2020 and 2021, everybody saw like stock market was going just crazy nuts, like up, but there was no news about commodities because they weren't doing anything. They were just still or probably maybe going down. But after 2021, we saw that the war happened in between Russia and Ukraine. Now what that sparked, you probably heard like, oh, gas prices are going up, you know, all over the world, oil is going up. With that, gold started to go up. That's the thing. Stock market started to come down. We saw massive crashes. We still have been talking about recessions and stuff. You know, banks are getting bankrupt and all, especially here in United States. It's crazy. But commodity prices such as gold, oil were just going up, and that's what I mean inverse relation. When commodities prices are going up, stocks prices are going down. When stocks prices going up, commodities prices are coming down. So those were the few things I wanted to share. And you know, as per my research, I've also came across that according to your risk profile, like investors usually diversify because there's an inverse relationship between both of them. Investors diversify their portfolio between, you know, I don't want to say 50% of the money in stocks, 50% of the money in commodities. That's totally up to you. How much risk can you take? But they kind of diversify in the sense, okay, if the stock market or at least the commodity markets are going up, so it kind of hedges their position, and they actually don't have to realize that much loss. So you can you know, use that kind of strategy as well. But those were the topics we need to go through for today. Securities and commodities, guys. It's my honor to share some of my knowledge with you, and the more I can be transparent and share as much knowledge. I know a lot of people don't know about it, a lot of things. This is just the beginning. As we go into the SIE, there's so many things I didn't even know after doing my bachelor's degree. My friend didn't know, who passed SIE with me. So that's why I was like, okay, we thought only these are the things we know, oh, it's gonna be easy, but there were so many things we didn't know about it. So that's why as we go deeper into it, you're gonna see so many things, you're gonna learn about so many things, you're gonna like it, you're gonna enjoy it. Oh, after I'm done with series, I'm gonna feel confident, at least I shared my knowledge. You guys gonna feel confident that you got a lot of knowledge out of it. So that's pretty much it for today, guys. Thank you so much, and I'll catch up with you in the next video. Take care, peace.